But okay,
Sorry.
sorry, that's just so that we can, if we can share that with you after the fact. So,
Yeah, we're gonna
um,
have this webinar.
all right. So again, I'm Jackie. I am with Homebuyer Realty. So originally, not to go back too far, but I went to NC State, go Pack, where I lived in Raleigh for the last 10 years. I moved to Charlotte 2 years ago. So I've familiarized myself over time with quite a few areas in North Carolina. So I'd like to think I'm an expert in all of North Carolina, specifically in Raleigh and Charlotte areas. But I studied chemistry and never used my degree. I went directly into software sales and then transitioned into real estate after making my first purchase and then getting into a couple of flipping projects. And then I made my second purchase when I moved here to Charlotte. So I'm really excited to share some of the things that I've learned over time and things that I can share with you.
All right. So a couple advantages of home ownership. Were you going to talk about this or was I going to talk about this?
Yeah. So first and foremost, whenever we're talking about home ownership versus the inevitable renting, right? We all start out renting, and some of those advantages you can see like on screen, but you are actually in control of what you want to pay. And that's the benefit of using someone like a mortgage broker like Vita. What you can do is you're able to create your kind of ideal situation and work backwards from that and determine what that's going to help you do. So, I mean, it can improve your credit. It also can make you money. Like, we're in this world where everything is going up in price, no matter what. You remember what eggs cost over the pandemic, what they cost now. So inflation is a very real thing. And when you're a homeowner, you benefit from that directly. So you've got incredible tax benefits of owning a home. And then, of course, it is the largest reason why and the ability to have generational wealth that you can pass down to family members and children.
Exactly. All right. So how do you know you are ready to buy? So I wanted to ask, and I wanted this to be very interactive, and we wanted to, find out where you guys are in the process. So would anyone mind sharing how much you pay in rent right now? Anybody? You guys are quiet. This is a quiet bunch. Okay. Maybe we'll get you talking by the end of this webinar.
Well, here's the thing. One of the first steps, thank you, Tabitha. I think that's pretty average around the range of what a lot of folks are paying right now. But I think one of the really ideally what the first steps is coming to a meeting like this, finding out what you need to do, and that is definitely the first step. So a lot of folks are here because they don't want to rent anymore. Their rent is going up $300. I think on average, people's rent increased 17% last year. So because of that, the older we get, we typically have a better job than we did the year before. Our credit scores are going up. You can save money, not to mention the tax breaks that are happening year after year as the government decides that we need more home ownership. So this is a really, really great place to start, and I hope that you can learn something here today.
Yeah. So obviously these are some of the things that when you know you're ready, these are the things that will be in order. So definitely having steady income. The lender, the underwriter that's working for the lender, they're going to see 2 years or want to see 2 years of consistent income, preferably in the same industry. They really like to see that. Obviously a solid credit score. But with me as your broker, we actually have options for credit scores as low as 500. So there's going to be options based on your scenario, hopefully. And yeah, that's just that slide. So let's go on to the next one. All right, so I wanted to give you guys an idea of what like luxury apartment renting costs compared to a mortgage. So this is just a apartment that I pulled from like realtor what is it, renters.com or something. But I wanted to show you a 3-bed 2-bath home, well, apartment, 1,273 square feet, starting at 1969 if you want to be in a decent area. So I was like, okay, 1969. So let me look up what a mortgage could be at that price point. And actually, let me see. It's going to be on the next slide. Here it is. So this is an idea of a $250,000 house. Let me let Zach in. Welcome to everybody that's just joining. I had to let a lot of people in. So here's a $250,000 house, and I went ahead and did a 3.5% down payment. So that's for an FHA loan, 3.5% down, a 30-year term, and I just calculated where interest rates are right now. So roughly 7%, a little bit more if your credit is a little bit lower, but this was based on maybe like a 700 credit score. So this is just to give you an idea of taxes, insurance, homeowners insurance, mortgage insurance, 1961. So the same 3-bedroom apartment could be a 3-bedroom house for you. And actually, let me go back one to the other side. So these are the most common mortgage types: conventional, which is typically 3% down if you're a first-time home buyer, or 5% down if you are a previous home buyer in the last 3 years. That typically has better interest rate. Well, yeah, it typically has decent interest rates at a lower cost. FHA is going to be a government-backed loan that you can start at 3.5%, whether you've purchased a home before or not. And they do have a little bit stricter guidelines as far as like the type of home that you purchase. It can't have any safety hazards or anything like that because this is a government-backed loan. Also, with FHA loans, you typically can get down payment assistance, and we'll talk about that a little bit more too. USDA loans, 100% financing. They typically have to have a 640 credit score to get approved for this, and it's for areas. And you do pay your closing costs, of course. And then VA loans for our veterans, 100% financed as well, typically lower closing costs because you don't have to pay all the fees that a typical client has to pay because you're a veteran, and we appreciate you for your service. All right, so I wanted to just talk about a few mortgage terms, nothing too deep because I don't want to overwhelm anyone. I just want us to touch the surface. I think we still got some more people to admit. Okay, so interest rate. This is literally the price you pay to borrow money. So it's going to be for your car loan, your credit cards even. You will always have an interest rate. So you're getting a loan and you have to give them this amount in interest on that loan. APR. A lot of people, when they see their loan estimate or their closing disclosure, they'll see APR, which is going to be higher than your interest rate, but it's going to be basically all the fees to get your loan are all included in what the annual percentage rate is. So whenever you see that, it's always going to be higher than your interest rate. So don't be alarmed. But it does say a percentage that represents the actual yearly cost of funds over the term of a loan. It includes the interest rate, any points, mortgage broker fees, and other charges that you pay to the loan. All right, ability to repay. This is where the lender is just going to review all of your information, your credit, your liabilities, to make sure that you can really afford this home that they're giving you this large loan for. So the ability to repay is the reasonable and good faith determination most mortgage lenders are required to make that you are able to pay back the loan. And points. Points, I'll just read the definition. They lower your interest rate. In exchange, you pay an upfront fee in your closing costs. The higher the interest rate, the lower the point cost will be. So when you've got to the point of you found a house that you like, now it's time to submit your loan documents to the lender and lock in your rate. This is where you can discuss with me how much you can afford as far as how much you want your monthly payment to be based on this interest rate and how much that's going to cost you in your closing costs. If you go with the highest interest rate possible, you're going to get lender credit from the lender. That means that they just want, if you're going to, take that higher interest rate, they're going to give you something for doing that. And it's going to be a lender credit that lowers your closing costs. If you go at the lower points or like a lower interest rate, you're going to have to pay a higher closing cost up front for taking that lower interest rate, because that means they're not going to make as much money off of you. So, all right. This right here, getting pre-approved, is all you, Jackie.
Yeah. Okay. So that was a little in depth, right? But one of the first steps is getting pre-approved. This is why we have professionals for this, to worry about that stuff for you. So I think, Vita, I think a couple more people are joining in.
Oh yeah.
So the first step outside of showing interest is to get pre-approved. So pre-approval is just a way of saying, what can I afford? Right? What can I afford? So I know we talked about the 3.5%. A lot of you have probably heard about a 20% down payment. But that's totally not necessarily what you have to do, right? So a lot of the times what we'll do is we'll say, well, what do you want to pay? Do you want to pay $1,800 a month? Are you comfortable? If you're paying your $1,800 rent, you're probably comfortable paying an $1,800 mortgage, right? So we'll take that number and work backwards based on what you can comfortably afford and find out what you're pre-approved for. That way, we know what's on the credit card to go shopping with. So
Yep.
that's why that pre-approval letter is so important, because we don't want to be looking at $1 million homes and we've got $350 credit or pre-approval worth. So just so that we know exactly where we can dream, that's where we want to start.
Yep. All right. So minimum document requirements, and it can really be this simple, guys. If you have like a W-2 job, all we look for is your W-2 for the previous year, preferably the last 2 years. Your credit report, we're going to do a soft inquiry initially to get an idea of where you are. But when I go to pull that pre-approval letter, I'm going to do a hard inquiry. 30 to 60 days of bank statements. We need to see how much assets you have towards your closing costs or savings towards your closing costs. ID, government ID, passport, either one is fine. And of course, we need to see that you actively have income. So whether it's 30 days of pay stubs, or if you're retired, we need to see like what your Social Security is per month, because we're using that to qualify you, or your retirement income, we're using that to qualify you. Self-employed clients, 2 years of business tax returns, or sometimes you can have 12 months of business tax returns and a profit and loss statement. And some lenders, they don't require, like there's certain things that they can alternate or not have to necessarily need. Like there's like a no doc loan option. There's so many different ways to finesse getting a mortgage. Let me let Roger in.
And knowing your credit score is a really important part of that pre-approval part. And a big misconception is that you have to have perfect credit to buy a home. That's why we have professionals finding out for you what works best for you as an individual, based on your credit score, your earning ability, where you live, where you want to live. There are so many different factors that go into if you can buy a home, or how we can get creative to make sure that you can buy this home. Your credit does not need to be great. It doesn't need to be good. It can be fair. And most people have fair credit when we're talking about purchasing homes. So keep that in mind, that you do not have to have the most perfect setup. You don't have to be making $1 million a year to be able to afford a home. You can do it as a person with fair credit and a good earning potential, a steady earning potential.
Yeah. And I will say, like I said before, I can work with scores as low as 500 if you have savings and assets, or like a large gift from family or something like that. We can work with that. If you have a 580 credit score, then you can qualify for an FHA loan with that 3.5% down. But if you have a 600 credit score or higher, that's when you can start to qualify for down payment assistance. So as long as you're working on always increasing that credit score, it's only going to help you. It's only going to be a benefit to you. All right, so just a couple tips to improve your credit score. Jackie, did you want to talk about this, or you want me to do the tips?
Yeah. So, if any of you have ever worked on your credit before, a lot of us have heard some of these things to pay your monthly credit report, your debits on time, your debts on time. That's so incredibly important because you don't want those negative lines on there. Having, about 30% of your credit usage. So you want to use your credit because that's how you build your credit, but you don't want to overutilize your credit.
Exactly.
So the truth is, neither Vita or I are credit professionals. We can give you a couple of tips, but for credit specifically, if you know that you need work on your credit, what we can do is we can set you up with a referral for a free consultation to help you get started on that journey. And if you got good credit, then that's amazing.
Yep.
But not everybody has that. We were all in our 20s once, and we all signed up for that Macy's credit card when we knew we shouldn't have. So if that's you, we got you too.
Right. So yeah, these are just a couple things to try to monitor, and you just get better at it. Like if you start implementing these things, you'll see that it makes a difference. And here's just the range of, I wanted you guys to see what the range of scores can do, or how it impacts your rates just by, a couple points difference, like a 50-point difference. It can make a huge difference. All right, so just wanted you guys to see that. And like I said, you'll get a copy of this so you can watch it over. So this is what I really wanted to talk to you guys about. Let me let Faye in here. All right.
Oh my gosh, you guys, we're talking about mortgage rates.
Yeah.
Hold on to
mortgage
the table,
rates
y'all.
over the last 40 years. I don't know if you guys can see it, but the first thing I see is this 18%. That is insane. I cannot imagine paying 18%, knowing they don't make the kind of money that we make now, even, what they were making in the 80s. So just imagine trying to pay 18% on a mortgage. And now we're at around, I've been seeing, let's see, I had someone like a FHA loan get like a 5.5% with really amazing credit, but everyone else, they're getting between like 6.5%, 7.5% right now. So just looking at this grid, or, just looking at these numbers have fluctuated so much. Like, I just can't imagine ever being at 18%. So when someone kind of like turns down their nose at 7%, that's just, like, we got to just be realistic. Like 7% is pretty normal. That's pretty average compared to what it was in the 80s. So it's never too late to say, you know what, I'm going to just go ahead and get this mortgage. Rates are not going to be like this forever. You can always refinance, but our goal is to get you into the home right now, regardless of where rates are, as long as you can comfortably afford it. That's it.
Yeah. And not to mention that even if we're just looking at 2020 and onward, right? You see that upward trajectory, but you have to think about what happened during that time. We were in the middle of a pandemic. The rates plummeted. So whenever the rates are lower, more people get approved. They were approving left and right, handing out approvals like Oprah,
Yeah.
right? So in order to counteract that, because everything in life is cyclical. So in order to counteract, everyone getting, you get a car, you get a car, you get a car, they had to slow that down a little bit so that they can even out the market. So as interest rates are increasing, you'll find that the prices of homes are leveling out too. So we're meeting in the middle. So one thing you don't want to do is wait to see, what the market is, because whatever goes up will always come back down.
Right.
So should you make the investment while you have a high interest rate, in 2 years and 3 years, it very well may even out again, as the scales tend to do. and you'll have a lower interest rate. And at that point, just like what everybody else was doing, remember Vita said that she was doing refinances during the pandemic.
Yes.
Everybody is going to refinance and take advantage of those lower rates. Your payment drops, your debt to income ratio, which is the amount of money you spend on bills versus how much money you get to keep, your debt to income decreases, you have more money in the bank, and then maybe it's time to make a second investment at that time.
Exactly. And also too, with refinancing, when I tell you the home ownership process can be so simple, refinancing is super simple, way less documentation, a much quicker closing time, and you start saving money instantly. So it can really be that simple, guys.
Yes,
All right,
not only that, you can do it from your kitchen table.
yes, you literally can. All right, so not knowing your budget, and I know that Jackie is probably more familiar with this when it comes to people that have been pre-approved and they start looking at homes. You want to talk about it a little bit?
Yeah, I mentioned this earlier, right? If we're, and I am very guilty of this. When I was looking for my first home, you couldn't tell me that I wasn't going to have a $2.5 million home on the lake. Okay, like those are my recommendations. That's what I was searching up. I just knew I was going to have a pool in the backyard, and I was 25. That obviously I was making like 35,000 maybe. That definitely wasn't going to happen. But I had all these champagne dreams, and what I needed to do was know exactly what I can afford so that I could be realistic about what I could buy.
Yeah.
And once I did, listen, I was Barbie and I was looking for my dream house. Okay. So once I realized that not yet, okay, because we're not gonna bust bubbles around here. If you want a dream house, we're gonna get a dream house. But we had to start somewhere, and knowing your budget is going to get you to the place where you can start your ownership journey, and you can figure out how to turn that into your dream home eventually.
All right. So yeah, so one thing when I generate a pre-approval, my initial goal is to find out what you can comfortably afford first. But I'm going to also get whatever the guidelines are for Fannie Mae and Freddie Mac for like FHA. I'm going to get your loan pre-approval to the absolute max that you can afford based on their guidelines. So I don't necessarily recommend you to start at the top of what you're pre-approved for. I recommend you to start where you're comfortable. So like when you get connected with Jackie for your real estate shopping, I'm going to tell her, hey, they're approved at this point because this is where they're comfortable at monthly payment wise, but their actual pre-approval letter can go all the way up to this amount. So we just want to make sure every option and what that payment can look like realistically, and not just go overboard looking at homes that are way out of your budget where you're not comfortable. We don't want you to do that and be house poor, basically.
All right. Absolutely. You want to leave yourself some room to negotiate too, because although we may think that people aren't buying homes, I guarantee I just went into the woods of Charlotte and got bug bites all over me. The house that I was showing had 15 offers before we got there.
Wow.
So people are buying homes.
They definitely are buying. So if you're not sure about it, the next person is, like, within the hour, they're going to be sure about that house.
That's right.
All right. So question for everybody. How much does a client pay a realtor for helping them find a home? You can say it out loud or you can enter in the chat. And Jackie will tell you. Let's see what the chat says.
Remember, I'm looking for that dream home. So be nice.
All right, then. You got it. Yep, okay. 0.
Faye, you are not wrong. Yeah. So whenever you're looking to pay a realtor, it really depends, right? That's right. So when you're buying a home, it costs you $0.00 to employ a real estate agent or a realtor. So you're absolutely right. This is a service to you because 30, 50 years ago, everybody was representing sellers and no one was representing buyers. And we were looking out for the seller's best interests and no one was looking out for the buyer's best interest. So because of, things happen and everybody's looking for a loophole, we made it so that this service is a completely free service for you, paid by the seller. Okay, so the seller negotiates what they'd like to pay, and if that is the home that you want to buy, then that seller has decided what they're going to pay a buyer's agent to walk you through that process. And regardless of whatever that payment is, I as a realtor I owe you at the same level of service, whether I would get paid $40 million or $15. So you should feel comfortable knowing that I am obligated to provide you with a level of service that is above and beyond. Even just as a realtor, we're obligated to an even higher level of ethics and morals when it comes to that.
Right. All right. Want to talk about that?
Okay, so when we're talking about buying a home, I know we talked about that 3.5%, 5%, 10, 20, whatever down payment, which is not necessarily always the case. But what usually is the case is planning for those payments. So no one's saying, get ready, we're buying a house tomorrow, what do you got in your bank account? We're not saying that. What we are saying is that find out what you need, find out what it's going to cost you so that we can work backwards from there and see what it's going to take. I don't know. Me personally, if I don't have a goal written down, a date or a number, I'm probably not going to achieve. I don't have a path to that goal. So when you're thinking about buying a home, we're going to plan. We're going to make you a plan. At least if you're working with me, I'm making you a plan. We're going to plan for any kind of out-of-pocket costs that occur prior to the sale or the purchase of the home, and any like down payment stuff that's required. So it does cost a couple of bucks to do that process ahead of time. However, we're going to plan for that. We're going to have all of those things accounted for so that when we get to the table and we sign on the dotted line, we get those keys and you've got a new home.
Right. So yeah, these are just some of the things to be aware of, because we don't want you to think it doesn't cost anything. You still have some upfront things that you do cover, but yeah, we want to have a game plan. That's all. Like, even if it's a year from now, just knowing what's expected, it will save you a lot of stress. Let me let this person in. All right. So one of the like the don'ts is that of home buying is that people don't have savings. Like, some people think, I don't know, that they can, just have $1,000 and that can work, but it doesn't work like that. There's a lot that goes into buying the actual home. So some things that I recommend to, save money or try to focus on saving money is just cutting some of your expenses. I know I have friends that, they eat out every single day, and that adds up. If you're eating out for every single meal, that all adds up. DoorDash, I know you guys are probably still using DoorDash and buying stuff off of Amazon. I'm telling you, if you cut that out for a couple months, you could save so much money. So just look for things that you can, cut back on, eating out, vacation. I know vacation is a big one, but if you want to have something of your own, you will sacrifice just for a little while. And like also other luxury items that fall into the want category, not the need category. Think about those things. Just think about them. Write down what your expenses typically are and what you can cut back on. Also, having your realtor negotiate sellers covering some of the costs with seller concessions. I don't know if you want to elaborate on seller concessions. Oh, Jackie, you're on mute.
Sorry about that. I was answering a question on the live. So I
Did you
definitely
want
hear
to talk
what you
about
were
seller
saying.
concessions a little bit? Like, are people still giving seller concessions or not in the
Yeah,
same?
actually, so a seller's credits and concessions are a great way to kind of offset interest. So it's basically like if you were to kind of if you were buying a $200,000 house and there was something you wanted to negotiate the price down. Instead of negotiating the price down and buying a $195,000 house, which doesn't really have a lot of change in what your like payment would be. Instead, what you can do is negotiate like seller's credits, um, so that those can be applied to your interest rate or your closing costs, so
Yes.
that your straight up out of pocket isn't coming necessarily from your out of pocket.
Mm-hmm.
It's going on to your loan. However, the difference in payment might be a 25 bucks from a 200,000 to $195,000 loan. So you don't feel that difference necessarily in your monthly payment, but however, at closing, if you don't have to bring that $5,000 check and it's just part of your credits, then you're good to go. And
Yes.
this is what I'm saying. When it comes to having professionals backing you up, sitting at that table with you and negotiating these things, these are really going to make the difference with how easy it's going to be and what
Mhm.
all of your options are, being able to explore all those options.
Yeah, our collective goal is to try to save you, like the person that we're working for, to try to save you the most money, as much money as possible. Also, too, having a savings account that you just can't have easy access to, that can be really helpful. I have an out of state savings account that I can't just walk in the bank and take money out. Having something like that, or even like an auto pay, like a direct deposit that goes to that savings account, even if it's $50 a paycheck, $20 a paycheck, guys, that makes such a difference. And of
Yep,
course, gift funds, you can absolutely receive gift funds from family to purchase a home. On top of that, 401k. If you have a 401k account, you can take out a loan from your 401k as long as it's to purchase a home. So
I
there's
did.
different ways around this. What were you gonna say, Jackie?
I
You
did
did?
for when I was purchasing my home.
Nice, nice. And also too, I know when I was purchasing my house, my tax refund, it went straight to a savings account because I knew I had the goal in mind in 2019 that I was buying my house. Like that was what I was going to do. So everything that I could save was going into that account. All right, down payment assistance. So there are several different down payment assistance programs. I'm a broker, meaning that I work with a ton of different lenders, and some of them even have their own inside down payment assistance program too. So there's just different ways that you can do it. I will say again, for most down payment assistance programs, you must have a 600 credit score or higher. And you don't necessarily have to be a first time home buyer. And there also is forgivable down payment assistance where you have for like the forgivable option, you typically have a higher closing cost, like they have a higher fee that they charge. And then there's a repayable option where you have a lower closing cost and you're just paying it monthly for that option. So there's just different options that you can take advantage of. But I will tell you this, if you have the funds, if you absolutely have the funds to cover your closing costs, I will make sure to compare. If you're still wanting to see what down payment assistance looks like, if you're curious, I'll definitely compare it because you're going to pay a higher interest rate because you're getting that free money. So I always like to tell people both sides of the spectrum. If you have the money, use it. But if you absolutely don't and you want to get into that house, there is going to be an option for you. All right. So not being realistic. So this is like a bonus tip. So we always talk about, oh, I want my dream home to have this. Oh, I want my house has to have this. It has to have this backyard. It has to have all these different things. But just know, typically your first house is not your last house. Most people buy maybe 3 houses in their lifetime, and that first house typically is not perfect. It's just not. It's not going to have everything. But again, it's something you'll be able to afford comfortably. I talk about that a lot. Something you can afford comfortably, guys. So just know that, you know, your first house doesn't have to be perfect. And keep in mind, if you want to, like, you know, be picky about certain things, just know that with you're paying rent, you're paying 100% rent on, or 100% interest on someone else's mortgage, when you could be paying, even for a not so perfect house, 7% interest, and it's yours to customize and do all the things you want to it. So just keep that in mind, that, you know, your first home may not be your most perfect home, but you will be able to make it that way if you want to.
Yeah. I'll give you a quick little story about me really quickly. So I told you all that I used to live in Raleigh, and that's where I made my first home purchase. And the house that I bought was this tiny little gross townhouse that had college students renting it. The carpets were disgusting. It smelled weird. All the appliances were mismatched. The floors creaked. I mean, it was a piece of work, but it was in this really good location, really close to downtown Raleigh. And over the 3 years that I lived there, I put in some work. I redid the floors, I painted, I did so many DIY projects to that place.
Okay.
And I'll tell you how much I bought it for. I bought it for $206,000. And then I sold it for $372,000.
Whoa. How long did you keep the house?
Over the course of 3 years. So, and prior to me putting it on the market, a next door townhouse with 3 bedrooms had sold for $350,000. So,
wow.
So
That's amazing.
I was not sure that I was going to be able to sell it for much more, since I only had 2 bedrooms, but the work that
I agree, Brenda,
put into my little shanty end up paying off in the long run. And that is how I was able to afford the home that I live in now, because otherwise I would not have been able to do it, especially as fast as I did it. Because I needed a good, healthy down payment to live in this place that I currently do. And I was able to use that equity, which is your interest, your ownership interest, how much of that loan you've paid off versus how much that the property has increased in value. And I was able to use that to buy my next home. So I was so far from my dream home starting out, that I'm able to get closer and closer and closer over time.
Right.
So that was 5 years ago. So
that's amazing. That is amazing. All right. So just really quick, the mortgage process, just like 6 steps. So first thing you do, you fill out the application. My app, it takes maybe 10 minutes to complete. It's very basic. It asks you for your income, your address, the loan amount you're looking for, and how much you have in assets. The basics, right? So you fill that out, you submit it to me. I'm the broker, right? I review it, review the docs before I even submit a pre-approval letter for you. So once you're under purchase contract, right? Jackie has helped you find your amazing home. That's when I'm going to generate your loan disclosure. So we're going to say, okay, here's where rates are today. You want to go with the higher interest rate with lower closing costs, or you want to go with the lower closing costs with the higher, a higher closing cost with a lower interest rate, right? What do you want to do? So then we get all the docs submitted. So all the docs that we talked about before, your photo ID, 30 days of pay stubs, 60 days of bank statements or gift letter, whatever you're going to use for paying for your closing costs, your tax documents. Those few things is what we're going to send over to the lender so they can review it in underwriting. Your underwriter, they're going to look at everything with a fine-tooth comb just to make sure they're not missing anything. We don't want 2008 happening all over again. They want to make sure you can afford this house. So after they've reviewed everything, let's say everything is reviewed by the lender's underwriting and closing team, guess what? You're clear to close. And that means after inspection, after the appraisal has been completed, you're clear to close. And closing usually can happen in 19 days or less. If you're on top of documents when we ask you for them, because the underwriter, they will always ask you for additional documents because they want to make sure that this is, that you can afford this house and the ability to repay is there. So we get you to closing. I'm going to be there. Jackie's going to be there. And then you get the keys in your hands after you sign those documents. And that is literally the process, guys. Like that, it can be that simple if you are focused and ready. All right. So advantages of working with a mortgage broker. So just to know like the difference between a mortgage broker and a lender, we just don't lend the money. A broker doesn't lend the money. We find the lender that can match your scenario based on where you are right now. There's somebody else coming in the room. Okay. So I'll talk about the advantages really quick.
Better late than never, you guys. Come on
Actually,
in.
I think Natalie was already here, but she got disconnected, I think, at some point.
Welcome back.
Hold on. There's was this a question in the chat? Oh, that was you, Jackie. Never mind. All right. So with retail lenders, Bank of America, Wells Fargo, Chase, all the big banks, they have a lot of customers, a lot of clients. They're well known. They get a lot of traffic on their own just because they're well known. I should have gave you permission on this waiting room. All right. So just to know, like with big banks, you have to fit into a box. They don't have a lot of options as far as down payment assistance, as far as being able to work with the 500 credit score or even a 580 credit score. They just don't have the options for that, and they don't want to. So that's the difference between us. We do want to work with those clients that aren't traditional loan clients. We want to work with those that may have a different scenario. Also, they have set guidelines and overlays that they will not budge on. So like there's just certain things that you cannot do with a big bank that you can do with a smaller lender or a brokerage. Also, closing on your loan. I don't know if any of you have ever worked with a big bank or ever had a mortgage before, but it does typically take 90 days. Oh, okay, Natalie. But it does typically take with the bigger banks 90 days to close because they have such a large volume of other people that they have to work with and get their loans closed. So with a brokerage, you have more of like a one-on-one access. We're typically available outside of the normal 9 to 5 hours. As you can see, we're doing this on the weekend. So that's the main difference. You have easier access to us, more options, and it's just a better overall experience working with a smaller brokerage. And this is just a comparison for you guys, pretty much what I was saying, just non-traditional program options, down payment assistance. We can work with a wider range of credit scores, complex situations. There's just so many different loan types out there that can work for, different scenarios. All right, so RNA Mortgage, one of our core values is to have long-lasting partnerships with our clients and to provide a superior experience. We're not a transactional company. We want to help you, your family, your friends in their pursuit of home ownership and, of course, generational wealth. You don't see that as much. We want to make sure people know generational wealth is possible for your future and for your family. And this isn't a one-time transaction for us. You are a client for life. So we do like to follow up with our clients after they close on a property. We do want to make sure that we stay in touch. We want to make sure we can help anyone else in your sphere, of influence, anyone that we want to be able to help them as well. And we'll definitely keep in touch with you, especially when rate drops. When rates drop, we want to make sure that you're able to refinance that loan as well. All right, so that pretty much wraps up our webinar. So how long do you see yourselves renting? Like after knowing what you've learned today, how long do you think you see yourselves renting? Like, do you think you have a game plan to purchase now? Let's see, what are you guys saying? Until rates drop again. Oh no, Faye. No, we don't want you to wait till rates drop. Trust me, they're not going to stay like this forever. At least it's not 18%. just remember, you're paying 100% interest right now. You're paying 100% interest right now. Also too, here is the information, the Instagram for my company that I work for, RNA Mortgage, my personal Instagram or my business Instagram. And then Jackie, Charlotte's homegirl, that's her Instagram as well. If you guys want to follow us for more tips and tricks and all things real estate and finance. And then of course we're on Facebook as well.
Right. And I know my handle is Charlotte's Homegirl, but I am licensed for the full state of North Carolina. So if you are not in the greater Charlotte area, don't hesitate to give me a call or ask me questions. Hit me up, send me a message, send me a text, whatever it is. I got you. And even if you're in South Carolina, I can refer you to someone who is, until I'm also South Carolina licensed. So, yeah, just let me know. I'm here to answer any kinds of questions.
And of course, I'm brokering North Carolina and South Carolina as well, all of the states. All parts of those 2 states. And also too, here's our QR code. If you want to scan that, if you're ready to go ahead and apply and start the conversation with me, we can set up the game plan. I can get you pre-approved based on where you're at right now and see what those numbers look like. So you can start working on, getting yourself ready. But I mean, if you're already ready, we can go ahead and, get that process going. And then if you want to just set up a phone call consultation, then this is the QR code that you would use for that. And any questions, guys? You guys can take your
I have one question. I want to know, do you all feel more informed after this webinar than before you got here?
Awesome.
That means we've done our job.
Yes.
Thank you so much for your response. I also am curious, how did you all hear about? Oh, awesome. That is great. Yes,
Great
there
day.
are so many options, even just within those different kinds of loans. How many options are subcategorized within those? So that's what we have the Vitas of the world for, because I don't know, and you don't know, and we don't know, but you know who does know?
I know. And I also want to send everyone in here the first time home buyer guide. I'm going to email you a guide. And then also, did everybody click on the link for the $50 raffle? I want to make sure that everyone had a chance to enter their information for the raffle. Okay. Let me get the link for the raffle.
Now, if you guys don't like free money,
right, we're gonna pick one winner.
It's
gonna be a random winner. Let me pull that back up. 1 second. I'll just put it in the chat. I want to make sure everyone has the chance to enter. Let me know if you can click on this. Okay, Janet, I just put it in there. Yolanda, it is in there. Make sure everyone signs up, because we want you all to have a fair chance. And it's a Visa gift card. It'll be emailed to you. We'll have the winner on Monday. And yeah, just make sure you all have entered for that gift card. Anybody have any questions? We still have 4 minutes on this chat. This has been a huge turnout. I was not expecting this many people to join us. So this is awesome.
Yes, I am incredibly grateful for all of you who attended today. And if you have questions that you don't want to ask in front of the group, definitely just hit the DMs up on Instagram or Facebook, or if you want to send us an email, all of that will be included in the follow-up of this webinar. Not to mention, we've got it recorded. So if you missed anything, and as I mentioned, if you want to just rehear some of my jokes, then you can just rewatch the recorded webinar when
That
we
will be
send
sending
it
out.
out.
Yeah. All right, 3 minutes, just in case someone has a question. We got 3 minutes. All right, I'm seeing everybody. Oh, wow. Okay, so everybody's getting in on the raffle.
Perfect.
Awesome.
Good. You deserve it.
Wow.
You deserve it. So, you know, you all are making this investment, this time investment, which arguably is more valuable than money, in spending time with us to learn something to help invest for your future. So we want to make this investment in you and potentially give you a gift card. You know, don't spend it all at once. But we want to say thank you so much for joining us today. We really appreciate it. I am going to spend a couple of minutes on live, Instagram live. I've got some questions over there. So that's where I'm headed after this. So if you want to join me there, then feel free at Charlotte's_homegirl.
All right, guys. Well, we'll let you go early with these last 2 minutes. So enjoy your Saturday, enjoy your weekend. Thank you again for hanging out with us. And yeah, we'll see you next time. Bye, guys.
Bye, everyone. Vita, can you join my live?
I will. Yeah. All right.
Thank
see you
you.
there. Bye, guys.
Bye, everyone.